Good morning, good evening, good afternoon, everybody. Kamari Ellis here, the Finance Rebel, coming to you with a midday or lunchtime Finance Rebel show. Just a check-in. So I wanted to talk about a couple of things. I know I haven't been on as much as usually doing lives, but again, I want to talk about a couple of things as it relates to and um, taxes and small businesses are starting a new business. I see a lot of people. I see a lot of people making mistakes when it comes to taxes and starting businesses, a lot of misconceptions out there in the world. And I wanted to come talk about that real quick. The banner right now says tax advice for real estate investors and flippers. That's not what we're talking about. We're actually going to be talking about tax tips for starting a new business. I'm doing new software, so I haven't worked out all the glitches yet, but I'm getting there. And you'll see that now. But again, Kamari Ellis, Finance Rebel Show. And like I said, I wanted to talk about a lot of the misconceptions that are out there in regards to taxes and business. And a lot of people are getting hurt, especially when it comes around to entity formation or business structures. But I'll definitely talk about that as I'm going forward here today. So real quick off the top, we're going to talk about what a business is versus a business hobby or hobby, business structure, bookkeeping, understanding your taxes, business expenses, and not spending money on tax expenses just to save on taxes. All right. So that might sound like a whole lot. It's really not. I'm going to be kind of in and out here real quick. First things first. All right. A business. A business is not a hobby. The IRS does not allow for folks to write off or claim a business hobby. Now, what is a hobby? Something you do for fun. There's absolutely no profit motive in a business hobby. All right. My wife, she crochets. She makes all kinds of blankets and scarves and hats. But guess what? She doesn't do it for a business benefit. She's not doing it for profit. She's doing it for enjoyment. There's no profit motive there. I've seen a lot of times people want to write off their hobby. You're not supposed to write off your hobby. Okay. It's not a business. Business is a for profit entity. Business is a for profit motive. You should have a profit motive when you are looking at a business. And when the IRS looks at your records and your returns, they're going to look and say, oh, this isn't really a business. They're just playing around. They're just doing this as a hobby. All right. So keep that in mind. All right. So that's number one. Number two, business structure. What type of business structure are you going to create? Now, I've seen a lot of foolery going on around these social webs when it comes to talking about creating LLCs, when it talks about creating S Corps, C Corps. I saw one guy the other day said C Corp is the ultimate business structure. Everybody should do a C Corp. They're doing LLCs because they're stupid and they don't know what they're talking about. Well, I don't know what kind of experience that guy has, but I'm here to tell you that's not true. All right. But let's just breeze through what entities there are, the most popular ones, right? So you have sole proprietorships. That's just a regular individual who wants to do business. All right. Sole proprietor, you can do business with your social security number. Basically, that's what a sole proprietor is. Now, a sole proprietor can also get an EIN number or an employee identification number, or what some people are calling a federal employee identification number. You can do all those things, but at the end of the day, you have the right to be a business just under your social security number. You don't have to necessarily have an EIN number. You can open a bank account with that. You can do all kinds of things. Now, I'm not telling you that's what you should do. However, what I am saying is these are things you need to consider. Okay. A lot of times people are trying to say that LLCs can write off more things than your average sole proprietor. That's a lie. That's not true. That's a lot of very uninformed information. I'm trying to be nice. A lot of uninformed information that's being spread around the internets. Um, You get the same kind of tax deductions as a sole proprietor that you would get under an LLC. All right. The biggest one out of them all, where the biggest deduction is, where you see, is probably C Corp. C Corp is able to write off more things than all the others. All right. But that's a sole proprietorship. So you can buy real estate under your name. You can rent it. That's a business, by the way. Real estate is a business. I know everybody's excited about real estate these days. You don't necessarily need an EIN number to do that. Guess what? If you wanted to go sell water in the middle of the street, get you EIN number or start a business under your social security number, make sure you get all your licensing on your local level. All right. Then you can go out in the middle of the street and you can sell water. It's a business, right? You can, as long as you're complying with the laws of the land wherever you are conducting your business. Okay. So that's sole prop. LLC, very popular right now. LLC stands for Limited Liability Company. Limited Liability Company, not Limited Liability Corporation, Limited Liability Company. Now, what a lot of people don't realize is that sole props can have an LLC, and it can be one member. One person apply for your EIN. You also go to the state level. You apply for approval at the state level, and you can have an LLC. Now, not to get too technical with you all, LLCs, solo member LLCs with just one owner, solo member LLCs with just one owner, is not really recognized by the IRS, but you can apply for it when you get an EIN number. It's more so recognized at the state level. All right. The LLC is really there for legal protection under the law, liability protection, asset protection, what many people say. But it's not an end-all be-all. No business structure is an end-all be-all. All right. So, again, I see people tell people to register all their properties under an LLC. That's one strategy. I've seen others. Everything has its pros and cons. All right. But I've also seen cases where people will try to do multiple LLCs and create holding companies. Again, when you're first starting out, don't get fancy. Just do the basics. Just do the simple things, right? Just get your money. Just make money. Okay. Don't confuse it with being fancy. Don't confuse, again, a lot of this mumbo jumbo out here when they say do what the rich do. Well, guess what? The rich had to get rich first. So you need to do what the rich did to get rich, or the wealthy, what the wealthy did to get wealthy. Don't do what they're doing now, because they're in a whole other phase of things, right? If you follow sports at all, there's a first half strategy or second half strategy, fourth quarter strategy versus a first quarter strategy. The rich and the wealthy are clearly past halftime most times, right? So they're operating in a different ball game. They are doing something totally different than average everyday folks that are just getting out the starting blocks. So trying to follow the rich and wealthy can be very dangerous and very, very expensive. Okay. All right. So LLC. Now, you can have more than one member in an LLC. You can have 2 members, you can have 3 members, you can have 4 members, et cetera, up to 99. You then become what's considered a partnership. Now, it's called a multi-member LLC. At the federal level, it's treated as a partnership. So you have to file your tax returns as a partnership. You have to follow the dates of the partnership. You have to do things a little bit differently than you would if you were just an individual. So you want to, again, keep those things in mind. The next popular one is called S corporation. And what S corporation means is just small corporation, right? So you create a corporation, you elect to become or to have S corp status. All right. The taxation is a little bit different. You still get the liability protection, but the taxation is a little bit different than that of a regular corporation. And it's also a little bit different than an LLC, kinda, sorta. The S corp has more. The S corp has more guidelines you have to follow, and one being that you should be on payroll. All right. Let me back up real quick. Sole proprietors cannot do payroll. All right. They cannot put themselves on payroll. I'll do another video talking about how people can pay themselves, but just for this video, I'm just going to talk about the tax tips overall. All right. So S corps are also supposed to keep annual minutes. They're supposed to do everything that a regular corporation does, and it's a little bit more stringent than an LLC. Now you have C corp. C corp is the big daddy of them all. That is a bona fide separate tax entity. That tax entity actually pays taxes to the IRS. It actually files its own tax returns. Files its own taxes. It's separate than an LLC or an S corp. By the way, I didn't mention LLCs and S corps flow to your personal return. All right. They are what's called pass-through entities. So if you make $1 million on your LLC or you make $1 million on your S corp, that goes to your personal tax return. There's some other little caveats in there that you could change some things, but I'm not going to go into that today. All right. So corporation pays its own taxes. Many people don't like corporations because they say they have double taxation. Because you have to pay tax on your income as a salary, and you also have to pay tax on a personal level, your salary on a personal level, and you also have to pay taxes on an entity level, on your business structure, your corporation level. So you have two things of taxes you have to pay, or two instances of taxes you have to pay. It's not really a big issue if you know what you're doing. All right. So those are kind of all of the entities, or the most popular entities that are out there. Again, don't fall into the trap of what the popular people are saying. Talk to a lawyer, talk to a tax professional, get all the information, understand all the ins and outs, and then do what's best for you and your business. All right. So number three, bookkeeping. I've been talking about that a lot. I've been running into a lot of people who are having tax problems because they don't do books. I'm probably a living testament of people who bring their bag of receipts to me, a big trash bag of receipts. It sucks for them because I have to increase their bill. It sucks for me because it takes more time, but at the end of the day, I got to charge for it, right? So it's still more money, it's still more revenue. We have to pay for that. But when you start your business, if you set up good books, if you keep track of all the monies coming in and out, because that's what bookkeeping is. Bookkeeping is categorizing or classifying the monies that are going out of your business, which are considered expenses, and the money that's coming into your business, which is considered sales or revenue. That's a little accounting jargon for everybody that's watching. All right. So do good books. Also, when you are a new startup business, more than likely you're going to have to put money into the business. That's considered owner's equity, partners contributions. It has a couple of different names. You want to keep track of that. I cannot stress to you how important it is to keep track of that. Namely, because when you start taking money out of the business, you can take your contributions out without paying taxes on them. What I see happen many times is people will kind of misclassify their owner's equity or owner equity contributions as revenue or sales. That will put you in a bad situation because you now will have to pay more tax on that money if you have a profit. If you have a loss, it doesn't matter. But if you have a loss, you are minimizing your loss, which you get to write off on your tax return as well. So I cannot stress enough to you the importance of books. All right. One other thing for all you newbie tax people, or newbie business folks that I see a lot: commingling of funds. What's that word mean? Sounds French, right? Commingling of funds is when you take your personal money and you mix it in with your business money. You don't want to do that. You don't want to do that at all. Again, it makes things more confusing. You might increase your sales or revenue higher than they should be. You might not be able to break out or discern what your expenses are. So you might be paying higher expenses. If the IRS sees that, it's an immediate red flag. If you're, again, ever audited or ever sued, it's an immediate red flag. It could totally break down the whole reason of being in business, because you can get sued a lot of times. The IRS and the courts will do what's called piercing the veil of a corporation. And for this conversation, that just means that's any entity: LLC, S corp, C corp, partnership, doesn't matter. They can pierce the veil, and then it's almost like you're at a sole proprietorship all over again. It's just you doing business. So again, you want to do everything right. You want to make sure you're putting the monies where they're supposed to go. You want to track those funds because, again, when it's time to pay taxes, you don't want to pay too much in taxes. The other reason for doing good books is because the better your books, the better you can run your business. How do you know if you're spending too much on your supplies? I work with a lot of real estate folks, and oftentimes I can kind of tell and look at, sometimes, not all the times, but I can tell when they didn't do good jobs in terms of pricing, right? When you're going and you're rehabbing a house, you have to pay for, let's say, framing, sheetrock, wiring, piping, things like that. Sometimes I can tell that these numbers are a little bit off. That's just a product of doing this for over 20 years and just seeing the numbers all the time. And then you go and you have a conversation and you can tell that either they didn't have everything, all the receipts, they might have paid some stuff in cash, which isn't a good practice, by the way. You should always try to pay everything with a debit card from your business account or with a check from your business account. We are in a new age today, so you can do Cash App, PayPal, Venmo, register them all under your business account. Make sure they're all flowing to your business account. But I can tell when numbers are off. And so, and that's usually because of poor bookkeeping or lack of bookkeeping. So that's bad. All right. So number 4, you want to understand your taxes. You want to understand what taxes apply to what. For example, if you sell shirts, clothes, anything that's subject to retail sales tax, you want to know that money is not your money. So I'm in Philadelphia, right outside of Philadelphia, and there is sales tax on sodas. I hate the tax, but that's a whole nother conversation. When a store gets that tax from a customer, it's not their money. They have to remit that money to the state. They have to pay that money to the state. And I've seen a lot of businesses go out of business and be fined heavily for not paying that sales tax. All right. But you also have income tax. That's money you make for yourself. You have estimated taxes. A lot of new business owners should be looking at paying estimated taxes, because if you made a profit at the end of the year, the IRS and your state and your local municipality are going to be looking for a check. All right. You don't want a big payday coming because you didn't do good bookkeeping. You didn't plan for it. You didn't strategize around it. So, understand your taxes, make sure you do good books, and then that way you can run a smooth business. I know it sounds easier than what it actually is for all those who are out there, but you chose to be in business. You chose to not work for the man. So you got to do what you need to do, right? All right. So 5, understand what a business expense is. A business expense by the IRS. If you notice, I keep referencing the IRS. Everything I do is within standard and code of the IRS, because if you've ever been through an IRS audit, it's a pain in the ass. And when I go there, I go to win. And anything I do, I go to win. And so all the stuff I'm telling you is to be able to win an IRS audit. But guess what? IRS can audit you, state can audit you, and also your local municipalities can audit you. And I see people write things off or claim business expenses that are actually not business expenses. So with all that said, ordinary and necessary, ordinary and necessary, ordinary and necessary. Think about those 2 words. You'll hear them a lot around tax pros. You'll hear being thrown around within the IRS. So the IRS only deems true business expenses as those that are ordinary and necessary. And necessary ain't really necessarily necessary, right? They're talking about what's something that's traditionally done in your business, what's something that is going to be helpful to your business. Again, the whole reason to do a business is to make profit. All your expenses should be to help support your revenue and helping you make more money. All right. So I get people that will ask me all the time, should I go buy a car to write this off? There's a video floating around right now, and I won't mention the guy's name because I don't think he's that great of a person, but he's talking about buying a jet as a tax planning strategy. And it's a good strategy, but it doesn't fit for everybody. But guess what? If you have a local business, a local store, and you're not traveling regionally, nationally, maybe internationally, you can't write off a jet. Okay. It just doesn't work like that. And the IRS will say, we're going to disallow this expense. Basically, they're not going to accept it. And then you plan one thing and the IRS will come back and say, nope, that's not going to work. We got something else in mind for you. All right. So understand that your business expenses, right? They're not a dollar for dollar benefit. So let's say you spend $100 on business expenses. You don't get the write off. You don't get the benefit of that $100, right? It will depend on what tax bracket you're in. And again, I don't want to get too technical, but let's say for every dollar you spend, you get 15 cents out of it. All right. So don't go around looking for business expenses just to try to save on taxes. Look for business expenses that is going to help you. That's going to help you with your overall business. That's going to help you have a successful business. And a successful business has to be profitable, at least at some point. First couple of years, you might get a little bit of leeway because you're just starting up. That's the growth phase. I think the SBA says either 80 or 90% of businesses fail in the first 5 years. So you do have a little bit of wiggle room, but that's not something you want to really take advantage of. You want to try to be profitable as soon as possible. All right. And so actually, I just kind of combined 5 with 6. So 6 was don't spend money just for the sake of saving money on taxes. So if any of you all have any questions for me, feel free to send me a text. You can text me at 484-278-1357. Again, 484-278-1357. I try to answer questions as much as possible and be as helpful as possible. But if you all are starting a business, let me know. What kind of business are you thinking about starting? Drop it in the comments, and I will try to give you some direction to that, or as much as possible I can. So again, this was 6 tax tips for starting a new business. Remember, business is not a hobby. All right. Business structure is very important. Bookkeeping, very, very important. Understanding what type of taxes you are going to be responsible for. And let me add to that, what dates your income taxes are going to be due, your tax returns are going to be due. You want to know that. Understanding what is and what is not a business expense. By the way, expenses for your personal life are not business expenses. All right. So just keep that in mind. And also, never spend money on a business expense just to save money on taxes. It needs to make sense. All right, folks. Again, Kamari Ellis out. I will see you all next time. Have a great day.